I don't have to tell everybody that the market is down, right? Um, so um, I do have to ask everybody a question though. So don't think about the market, just think about this one little question here. 2 weeks ago, just you don't have to answer this in chat, just answer yes or no here. Um, did you know that Trump was going to be putting tariffs out on the 3rd of April? Yes or no? And odds are most people will say, yeah, everybody pretty much knew that, right? And yet, the market didn't think so. And so they come out with the tariffs and they tank it off. So surprise, surprise, surprise. But that's my point. Market always overreacts to everything. Not to say they won't continue to go down. Um, one thing though, and what you're seeing on this S&P chart is kind of a fib retracement. You'll notice that now the retracement back up, to 50% here is basically the highs that we were at literally last week. So if we can get back up there, we actually have a 50% retracement from the highs that we had. Um, but if you really kind of put things into much larger perspective here, let me just do this. Um, let's just use the old SPY. That's a good little thing to use here. And we'll just kind of bring this chart out a little bit. We'll even scrunch it up a little bit so we can kind of get even a better picture. So this is basically since September of 22. And you can see we've had this nice, huge rally in the old S&P. And yeah, we've come back to where we were in September. So for the most part, yeah, we've come down a little bit, but it's a long ways from where we came from over the past several years. Even last year, if you kind of go back to beginning of last year, we were basically right over in here. So we had a nice 25% rally last year. We went down 12% from the highs. We're only down 7% from where we opened the year. So if you go from the year open, we're down 7%. If we're from the highs, we're down 12%. And yeah, it's down a little bit, but the sky hasn't fallen and the world's not going to collapse and everybody's going to die off and the world's going to become a desert. So we don't have to really worry about that all that much. So now the question is, do they gain their ground here and start trying to push things up a little bit? And I guess that's the big question. And really, the tariffs apparently don't even come in force until Saturday anyway. So, you know, yeah, the market's down some. We'll just kind of see what it does from here and kind of go from there. Interestingly, and this is usually what happens when the market pretty much capitulates, you've got basically everything down. You've got, not only the indexes that are down, you've got all the energy. I mean, crude oil got, a nice little haircut. You've had gold get a nice little haircut. Um, so a lot of things have just kind of gotten beaten up. Even the grains took a bit of a hit. So the only things that were really up today are bonds. Bonds are back to 120. Bonds kind of like this a little bit. They started jumping up. So I guess the big thing is with the market down is where it is, and of course the rumors everywhere are recession, depression, mayhem, everything like that. So odds are the Fed's not going to be raising interest rates. Hopefully, they'll be cutting interest rates to kind of help spur on the economy, which actually isn't doing too bad right now. And so bonds are up because interest rates should be coming down. And that's kind of the picture that you see today. And remember, today is just a very, very, very small slice of life in the history of the market here. So one day doesn't make a market, and there it is. So before everybody just starts to panic and pull your hair out or anything like that, it's really not that bad. We're just back to where we were in September. And I mean, the market never just always just goes up and up and up, which if you look at this chart, it's doing a pretty good job of that, right? But we've had some really big corrections along the way. I mean, here's kind of a decent one here, and here's a decent one here, and you got some in here. Now this one's a little steeper than most of the others, but that one right there and this one right here are about the same. This one just took longer. And this one was a pretty steep decline here. So we've seen these before and we'll probably see them again. But the big question is where do they find a bottom? And I think that's the really the biggest question is the September lows good enough, or do they want to go down to the July lows or whatever it may be? And so we'll just kind of stay back and kind of watch and see what happens. Um, Another thing, let's just change this chart. What the heck? What thing? You can see, gold, took a hit. It was actually making new all-time highs yesterday. How you like that one? We went up to the 3201 and hit 3200 on gold, and then they dumped this thing off first thing this morning. But look what they've done. They snapped gold back up pretty good. We're back above 3100, which we've been, around in here for the past, and I guess this is 4 trading days. Um, and so, gold's actually held up, even though it's down from where it started out because it closed out at 31.96 yesterday. It's down from where it closed yesterday, but it's still holding up pretty good. So I think gold is, still probably one of the safer things to be in at this point in time, and we'll probably continue to kind of see things go from there. And I was kind of sitting back over the weekend because I knew that the tariffs were coming, right? Um, so I was sitting over the weekend, sitting here thinking, okay, so they put all these tariffs on everything. Okay, farmers are going to yell and scream and complain. I get all that. And we had prospective plantings come out on Monday, and basically they were just saying that we have less corn acreage and a whole lot more soybean acreage. So we're going to have more soybeans that we can shake a forest at, let alone a stick or two. And so, and most of our soybeans go into crush. And what they mean by that is go into soybean meal and soybean oil and all that good stuff, just for biofuels and things like that and feed. And so most of it goes into crush. About, I think it was like around 75, 80% of it goes into crush. I think it's something like that. But we export most of it. And we just had a big sale going out to, I think it was Vietnam or something like that, and Thailand and various places. One of the largest places for us to export corn is Japan. They buy a ton of our corn. But anyway, when we start looking at soybeans and stuff like that, they're going to have a harder time kind of exporting those. And then I got to thinking, well, wait a second. No, another of the big things was cars. We're going to put tariffs on cars and things. And so I got to thinking, well, okay, so what's CarMax doing? So if you look at KMX here, and I mean, granted, it got kind of trash down in here, but it's kind of bounced back up a little bit. And of course, everything's gotten beat up today. There's hardly a stock that you can find that's basically up. So I was just sitting there thinking, well, maybe CarMax or AutoNation or something along those lines might start doing well because of their used cars, right? And if we look at the used cars, we still have those. There're not going to be tariffs on those. People can just buy and sell cars from each other. And here we are, Carvana and all those things. So I think that's kind of an industry we might want to kind of keep our ear on a little bit, to see if, how these tariffs come out on autos, and the parts that go into autos, let's put it that way. Is it going to be hurting the new autos makers? And but do the used ones, we go back to what was it, pandemic, when everybody's wanting a new used car because they didn't have new cars because they couldn't get chips for them. Remember that? So do we go back into the used car business as we did back in COVID times, and now used cars are going to start spiking back up to record highs again? I don't know, but I think it's something for us to kind of keep an eye on and kind of watch a little bit. Now, I've got an alert set on CarMax at $80. Right now we pulled down to 76, but I got an alert sitting there at $80. If it gets back up there, then odds are we're probably going to start perking back up and start moving back up a little bit. We might start looking at that. And so if we get back above $80 on CarMax, might be nice to see if we couldn't get back up to the 85 area, maybe even as high as 87 and a half on CarMax, and might do a kind of a longer range option, heck, maybe even a leap or something like that, just to kind of see what it does. But I think that's going to be kind of an interesting area to kind of watch for. And you've got basically two camps out there. One is uh, tariffs are horrible, tariffs are bad. I mean, we go into recession, depression, blah, 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 blah. The other camp is this is just a short-term blip in life, and it's just a tool to use to get people to, kind of bow to, some, fair trade agreements and things of that sort, which I mean, even Canada came out, what was it, yesterday or day before yesterday, and say, well, if you remove your tariffs, we'll remove all of ours. Hi, why not? I'm game for that. And but I think if you see a lot of that, all of a sudden tariffs start going away and people start striking deals and everybody's all happy and everybody has all their trade and everything goes. But I don't know how it's going to pan out. I have no crystal ball. Too bad I don't. But we'll just have to kind of take it day by day and week by week just to kind of see, how this is going to actually play out in the market, and see which camp is going to win on that. And I mean, I don't care which one does. I mean, I just trade markets the way they go, and that's all I care about. So, but as long as that's out there, markets are going to move, and a moving market you can usually make money on somehow, some way. So, but you got to kind of do things on a shorter term basis at this point in time. It's really hard to sit there and go, well, let's just get long Disney and see what happens. That's not going to work out. So we need to, kind of just take it, on a short term basis, day by day and week by week. And I think everybody's going to be fine. But I mean, if you just kind of step back and look at the big picture of the S&P, yeah, we've come down a little bit, but the thing hadn't just fallen out and just died off. So, and that's the big thing, is just kind of keep things in perspective. Yep, things are down, and most people's portfolios are down from their highs. Yes, but they're not down to where we were 3 or 4 years ago. And of course, nobody likes anything being down. Nobody does. But just kind of put things in perspective a little bit. I don't think it's all that bad right now. But that's not to say that they won't really start trashing this market. They kind of have an excuse to right this second. We got some big numbers coming out tomorrow morning on the employment. We saw ADP come out on, was it yesterday? I've This week has gone by so fast. I'm trying to keep my brain straight here. Um, but anyway, they were expecting like 116,000 jobs and it came out at 155,000 jobs. And that's the private payrolls. Now, what they come out with and what the employment situation report or non-farm payrolls, whatever you want to call it, tomorrow, don't necessarily agree with each other. So it'll be interesting to see how those numbers start panning out for tomorrow, to see if private payrolls are actually hiring and stuff like that, based off what the federal government's saying as opposed to the ADP. And I think that's going to kind of gyrate some little excitement in the market and everything like that tomorrow morning at 8:30 Eastern. So if we now we'll see what that does and see if it can, uh, how do you say it, cloud the tariff thing briefly. And it might give them, kind of an excuse to say, hey, being down 12%, let's rally this thing. And if they do that, fine. We'll see what they do. If they don't, and it gives them an excuse to sell it some more, then we'll just kind of rejumble things around a little bit. One thing that I would have been suggesting people do over the past several weeks, even month, 2 months, whatever it is just to go out and just get some SPY puts and just throw them out there for insurance. And we've talked about that in here. I've talked about it in various places, but just to have some, tucked away for insurance in case this thing does die off. You've got some, puts that are out, a couple months, and uh, they'll actually offset a lot of losses if you just kind of do that. So, but really, with that, I think we need to see what the numbers come out tomorrow. And it wouldn't, just remember the tariffs are coming out on Saturday. There it is. And who knows what kind of news is going to be coming out this weekend. So, whether we, gap down on Monday morning or gap up, kind of will let you know what everybody thinks about it there. But it'll be interesting to see where we start out Monday and see what this market's going to be doing after the weekend tariff implementation. And so it'll be interesting over the next couple weeks just to see how everything pans out and who they take off the hook and who they leave on the hook and everything like that. But apparently, they put tariffs on like 147 countries or something like that. It was, I forget what the number was. I just threw that number out the top of my head, but there it is. Yeah, pretty much everyone. I'll agree with that. Yeah, I don't think any stone was left unturned on that one. And it was just like, well, they have tariffs on us. We'll just put tariffs on them too. And it was just kind of tit for tat. And which, I can't disagree with that in a way. If we have to pay tariffs going into their country, why shouldn't they have to be paid tariffs coming into our country? I mean, I don't disagree with that part, but if we're just doing it just to spite countries, I mean, that one I don't really agree with all that much. So, but anyway, but with that, I think we'll wrap things up here. We'll see what non-farm payroll does. We'll see what the weekend does coming into Monday. I think Monday's going to be kind of a big day. Um, After everybody sees exactly what happens when all the tariffs, quote unquote, go into effect, and see what happens in the ports and things like that. Well, I'm sure we'll see newses and all kinds of stuff. They even had a thing where any ship from China or owned by China or had goods from China has to pay like a port tax of $1 million for every time they come into port in the United States. I was like, holy Moses, that's a lot of money, especially on the West Coast. So, but I mean, I don't know if that's being done or if that was suggested. I just heard that and I was just like, oh geez. So everything's going to get kind of expensive real quick if they're going to start doing that. So, but anyway, I think we'll just kind of leave it at that. We'll come in on Monday. I think that's going to be our next, kind of big move day. We'll probably see a movement off non-farm payroll. Don't get me wrong. Up, down doesn't really matter. But I think it's going to be bigger come Monday just because they'll get to see how things start to unwind. So if you have any questions, let me know. Otherwise, we'll see what market does in the morning off the news.